will, we'll be in the hundreds of thousands of dollars for a Bitcoin end of the year into next year, but it's not going to be without some pain, I think. And people would be very silly to think that it's just every day after they post a flows in Asia time, the price ramps 5%. I think we get to $1 million Bitcoin, at least like on a tick, right? I don't think we have a big enough imagination about how high we could go, because the global bond market is just so massive. And when the bond investors make a decision collectively that they don't like being in a particular market, they will stampede into something else, and it will cause reverberations around the global economy. And thankfully, we have this thing called crypto. We have a little small door, and some people can be saved. Most people will not. But those of us who hold these assets, I think, are in for some massive gains in fiat terms.
Bitcoin's price has been extremely volatile, recently fluctuating between $60,000 and $67,000 after peaking at $73,750. Following this, the market witnessed a significant recovery, with Bitcoin's value rising as it approached possible adjustments before the anticipated halving event. As of making this video, Bitcoin's price has stabilized at around $67,000. Despite many investors being worried about its recent drop in price, BitMEX co-founder Arthur Hayes strongly believes that Bitcoin's value could skyrocket, possibly reaching several $100,000 by the end of this year and continuing into the next year. He even believes that the price of Bitcoin could soar to $1 million for each coin. He suggests that a significant move by bond investors from bonds to Bitcoin could dramatically alter the global economic landscape. We will now bring you clips from Arthur Hayes' latest interview, as he shares his updated insights in the market. As we do, please take a moment to give us a like, subscribe to the channel, and turn on post notifications for more similar videos. Make sure to watch the video to the end, where Arthur Hayes provides detailed explanations of his predictions for Bitcoin's potentially astonishing future value. We hope you enjoy it.
I mean, it's the same thing that everyone has been talking about since 2009, like too much debt, not enough economic progress. And so I think we're reaching the end of the line for the sovereign bond market. And so people are starting to wake up and realize that, like, why do I own these government bonds, especially if you take a look at 10-year bond yields across the world versus the nominal GDP rate in whichever country you're in. Most likely you have a negative real yield, meaning the government says, please give me money to do stuff, and then government's not willing to pay you at this rate that the economy is growing. So it's a bad fucking deal. But now, for the first time in human history, we have this thing called Bitcoin and crypto, and a few clicks on your phone, and all of a sudden you've taken that fiat that's going to be infinitely debased, and now you own some of the hardest assets that we've ever created as human civilization. So that's the backdrop. Obviously, as money keeps leaking out into Bitcoin, the price rises. That's why it's up however many tens of thousands of percent since 2009. And the banking system has finally realized that the people who hold all these bonds are like, I don't want to do this anymore. And that's why I believe you're seeing this renewed push for ETFs, right? The Winkle clowns, it took them 10 years of trying. They still don't have a fucking ETF. That started in 2013.
They get all the credit in the world, but yeah, I mean, how did they not win?
And then Larry Fink comes in June 2023, puts an application in, boom. 6 months later, he gets an ETF, and Fidelity and all the other guys. So that tells you something. The establishment wants to hold your crypto because it doesn't want your money to leave the system. So whether you buy a Bitcoin ETF or gold ETF or S&P 500 or NASDAQ 100 or NVIDIA or whatever, right? Just don't leave our little system. Don't actually have economic freedom, financial freedom. We'll give you a derivative called the Bitcoin ETF. Stuff your money in there. Now, for some people, obviously, they have no choice. If your retirement account, you can only invest in certain things. The approved good assets that the government tells you are good for your retirement. Of course, owning physical Bitcoin isn't one of those things, but now you can buy this ETF, and we're seeing some of those flows. Or if you're a fund manager and you don't want to update your PPM to add a new asset class, and that's going to be a pain in the ass, now you can onboard the negative correlation and high volatility, good sharp ratio of Bitcoin returns to your portfolio. Just go buy one of these products. So that's kind of what we're seeing. We're seeing all this money flow into the system. It obviously gives a big confidence boost, especially to like the real people who hold real crypto, not on a derivative product. And now we're seeing fucking dog coins go nuts. Solana every weekend. It's the same stuff. It's a wealth effect. It's fun. I'm super bullish. Obviously, we've had a bit of a pullback. I'm sure we'll have more pullbacks, but the trend is set. We're not deviating from it. Let me know when the politician in your particular part of the world is saying, I'm going to balance the budget. I'm going to cut government services because we've spent above our means for the past, 40, 50 years. Let me know when that happens. And then maybe I'll change my opinion on whether or not there's going to be more money printing to keep these bankrupt governments afloat.
Traditionally, many have turned to government bonds, a type of investment that governments sell to borrow money. However, there is now a problem. These bonds aren't paying back as much as they used to, especially when you consider inflation. If you invest in these bonds, the money you get back might not be worth as much because the cost of living goes up. Enter Bitcoin, a digital currency that stands in stark contrast to traditional financial assets. Its creation marked the first time in human history that individuals could easily convert depreciating fiat currency into a digital asset outside the conventional financial system. Let us now return to the interview where Arthur Hayes discusses the market and his price prediction for Bitcoin in more detail.
Detractors of all of these flows into Bitcoin, I'll reference Jim Bianco. He had a great presentation. So his point, and I think it's a valid point, is we've had a bunch of people who now can buy these Bitcoin ETFs, very simple and easy. And what are they going to do when they get their first Darth Maul candle when Bitcoin's down 50% in 2 minutes and whoa, yeah. This is fucking crypto. Are they going to run for the hills? Are these flows as sticky as we would like to believe? It's just people ticking boxes on their 401k forms or retirement forms and just letting that money flow in every month when they get their paycheck. I don't know. So we're going to have to see that. We will get that correction. Absolutely. And we're going to test this notion of how sticky are these flows? Are the persistent inflows that we see every day into this, what are the 12 ETFs? Will that switch to a net outflow if we get a massive correction in the price? And I think that's going to tell us a lot about how strong this narrative of institutional money, retail money on the sideline that's in, vehicles that couldn't invest in Bitcoin previously, but now can. What's their sensitivity to the price movement of Bitcoin? So we don't know that answer. We'll find out sure enough. Hopefully, they're diamond handing that shit like we all are on the physical side. But I think that's going to be the first real test of this bull market is how fickle are these new investors? Are they here for 1 to 2 years, or is it I bought Bitcoin, I made 30%. Thank you very much. I'm going to go back into NVIDIA. I don't know. So I think that's going to be the first real test of this market. Maybe the having is buy this, a sell the news type of event. It happens. We got to get a correction, washes some people out. We see how things perform. We also have what's going to happen with reverse repos in the US, and is that going to be drawn down sometime in April, May, and what's going to be the response for, the US Treasury and the Fed. So we have some things. I still am confident that there's always some things, right? We'll climb the wall of worry and we'll be in the hundreds of thousands of dollars for a Bitcoin end of the year into next year, but it's not going to be without some pain, I think. And people would be very silly to think that it's just every day after they post a flows in Asia time, the price ramps 5%. I think if we really see a concerted global effort by all the major economic blocks to financially repress people into buying their bonds, and we have this little door of crypto open, and the bond market is I don't know, however many tens or hundreds of trillions of dollars, right? Yeah. We don't need all that money to come into crypto. We can see it a little bit. And remember that it's a marginal price. It's not about the whole market cap. The last price is only a Satoshi trades at 1 million Bitcoin, but that'll be the last price, right? That's how it works in markets. It's all about at the margin. So at the margin, if we have global fixed income investors who hold bonds who are I'm getting a bad deal, at least I'm going to allocate some of this money into crypto, then I don't think we have a big enough imagination about how high we could go, because the global bond market is just so massive. And when the bond investors make a decision collectively that they don't like being in a particular market, they will stampede into something else, and it will cause reverberations around the global economy. And thankfully, we have this thing called crypto. We have a little small door, and some people can be saved. Most people will not. But those of us who hold these assets, I think, are in for some massive gains in fiat terms. And that comes with a whole host of issues in and of itself. Is that the right way to value your portfolio or not? It's more of a philosophical question. But I do believe that if we really hit this sovereign debt bubble, if that is deflating this cycle, then we have it's going to be so ridiculous. how high this stuff goes.
Meanwhile, global investment bank JP Morgan has recently highlighted concerns that Bitcoin remains overbought, despite its recent price corrections. According to analysts led by Nikolaos Panigirtsoglou, the cryptocurrency could see further price declines as the next halving event approaches, a situation exacerbated by what they describe as an overbought market position. This assessment is based on analyses such as futures position proxies and the premium of Bitcoin futures over its spot price. Additionally, JP Morgan notes a slowdown in inflows to spot Bitcoin ETFs, contradicting the optimistic market expectations for sustained demand and year-end price increases, despite a brief uptick in ETF accumulations, excluding Grayscale's Bitcoin Trust. Amidst these dynamics, JP Morgan maintains a cautious stance on Bitcoin's future pricing, even suggesting a potential drop to $42,000 post-halving, while JP Morgan CEO Jamie Dimon expresses personal skepticism towards cryptocurrency investment. How do you think the anticipated Bitcoin halving event will impact the price of Bitcoin? Do you agree with JP Morgan's cautionary stance, or are you more aligned with Hayes' bullish outlook? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates from the cryptocurrency world, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support is crucial for us to continue providing in-depth content and discussions on the latest in crypto. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.